you have new moves that have nothing to do with tech. Yeah. It's your own personal reshuffle. You buy ExxonMobil, you buy Bristol Myers. Two areas of the market that were disappointing last year, energy and healthcare. And you're going in. Why?
Mean reversion. I think you're going to see it. I think you're going to continue to see the broadening out like we have been seeing since October, the lows. We saw the S&P equal weight outperform the S&P market cap weight by 200 basis points. Yesterday was much of the same. And I just think I'm a very big believer in mean reversion. That's not to say I think tech is going to crash. I don't. I still own a lot of tech. We're going to talk about that later. But I just think there are some opportunities that are presenting themselves. I haven't owned ExxonMobil in probably 10 years.
Wow, because you were Chevron.
I was Chevron.
Which you sold, too, because you got fed up with that.
Yeah. You know what? Exxon has done such a better job in the last couple of years in terms of execution, in terms of M&A. I love this Pioneer deal. I'm sure Joe has an opinion on that as well. They're going to be the #1 player in the Permian, whereas Chevron, they're making M&A outside of the Permian, which I'm not really crazy about. There's a lot more volatility there. This stock trades at 5.5 times forward estimates. The long-term average is at 7.9 times. You get a nice dividend yield as well. So down 4% last year, Scott. I think we can see. I think energy is going to rally this year, again, as a mean reversion trade as a sector as a whole. And I want to own Exxon because it's 22% of the XLE as well. People will be buying Exxon and Chevron as well, right? And I also own Schlumberger and Diamondback Energy. Bristol, we talked about this a couple weeks ago.
Well, you have J&J.
I have J&J.
Right, so you've legged into energy a little bit more of late. So why does this make sense as part of that?
Well, again, also mean reversion, and I had been buying a lot of J&J over the last month. In fact, offline, we were talking about healthcare, and the past month is probably the area where I've allocated the most in terms of a new sector. And so I'm getting close, actually, to market weight. But these are really concentrated portfolios in terms of positioning within the portfolio, rather. This stock was down 36% last year. It trades at 7 times forward estimates. It has one of the highest dividend yields, 4.5% in the sector, and they've got a bundle of cash too. A really good balance sheet, very little debt. What I think is going to take some time to see this play out because a lot of their drugs are going off patent in the next couple of years. But that's why we're seeing so much M&A from the company. In fact, since 2000,
they've been on a spending spree.
Since 2019, they have spent $119 billion on M&A to replenish that pipeline.
Yeah, well, I mean, since 2 weeks ago.
Oh yeah, no, I know.
Right?
3 deals, I know, and that kind of caught my eye. And that's what we talked about. Remember, I sold Nike and I said I have a little cash on the sidelines. Then they did this other deal. And I was thinking to myself, it's so cheap. It's so hated. It's only going to grow revenues and earnings low single digits. That's not glamorous by any means. But I do think as these new products take hold, you will see a kind of a resurgence of interest in this name. And again, it's just so down and out at this point.